And you've been talking about banks, Manish. So I have a question from one of our audience here who wants to know, private sector large cap banks, do they have any more upside in valuations, or are they in, do they have any more room for upside?
I think so. Some of these larger private sector banks, for example, if you see, are trading at almost a 10-year low as far as valuation multiple is concerned. And if you look at some of these larger PSU banks, then they are trading very close to their, ROA, right? Almost at their ROA multiple. So there's no premium that you're actually giving to them. And the funny part is that in the last couple of years, where the NBFC, particularly the MFI sector, has gone through asset quality challenges, despite the way the retail loan book for all these banks have grown out in the last 4 or 5 years and the kind of size it has attained, we've actually not seen any major asset quality issues that have emerged out at this juncture. So the only issue basically in banks, and the reason why they've underperformed in the last year or so, is basically that the credit growth at the economy level has kind of gotten hit a little bit, primarily or partially maybe due to RBI's clampdown and them controlling the whole retail loan book growth in order to try and control the asset quality proactively. But from that perspective, like I said, if you are looking at 50% plus sort of a PPOP growth, and if you have a company that is trading at anywhere between 1.2 to 2.2 or kind of price to book, and delivering in and around 15% sort of an ROE and 1% plus ROA, I think it's a good time to actually look at these stocks and buy. Yes, there is enough room for these stocks to perform and give you substantial returns. Why a 1.2 will not go to 1.4 or 1.6 is beyond me.